Good morning, everybody. This is Patrick MontesDeOca with the Ticket Talker live streaming trading room here at the Equity Management Academy for January the 10th, 2020. Forgive me. Let's jump right into the gold market, trading last at 1554.20, down about 10 cents. The daily average that we have for today is 1553. The sell one level above the average, above the mean, is 1564. The sell two level is 1574. The buy one level below the mean is at 1543. The buy two level is at 1531. The market currently is trading above the average price of 1553. And on the daily basis, it has activated a bullish price momentum. When the market trades above the average price, it activates a bullish trend momentum. Below the average price, it's a bearish price momentum. So it's activated by the mere fact that it's trading above the daily average price, the target of 1568. Excuse me, the first target is the sell one level of 1564. On the left of the chart, we have the daily numbers, as you can see, and on the right of the chart, we have the weekly signals. And what we do basically, what I do here at Ticket Talker, and it's verified by Ticket Talker, is I use this trading tool, proprietary trading tool called the VC PMI, to trade particularly derivatives, futures, and stocks. And I'm showing you how the tool is used and the artificial intelligence behind it. And so, if we go right into the artificial intelligence analysis, it tells you that the price trading above 1553 is bullish, and it activated the first target of 1564. The second target is the weekly sell one level of 1568. The third target is the sell two level of 1574. And the fourth target basically is the sell two level of 1583.40. The 1583 was the short signal that was activated here last week, and we published it on reports and Seeking Alpha, and also on my videos if you reviewed the videos here for the past couple of weeks. I make a point of documenting completely transparently what I do and how I use this incredible trading tool, because if you're a self-directed individual and you're looking for something that will give you the edge, something that will give you, you might say, an insight into something different than everybody else is looking at, then you came to the right place, because we use pretty much our own unique proprietary algorithm, and the basis of that algorithm is the mean reversion trading. And what we do is we teach you how to trade the supply and demand of the market instead of the rhetoric, or instead of the emotion of the market. Regardless of any fundamental news that may drive the market to an extreme above or below, the math of the market will identify those extremes, and based on just the natural forces of the market, the physics, the mathematics of the market, when the price is basically exerted to an extreme level, just like a rubber band, it's bound to retract to its equilibrium, to its mean, to its average price. And so we pretty much follow the same principle, very simply, the rubber band effect, that right now the market is at the mean, the sell one level is at 1564. So we, as a self-directed trader, I wait for the highest probability for me to execute the trade, and that's when the price is either at the B1 level, which is the extreme below the mean, or at the sell one level, which is at the extreme above the mean. And what you see here on the chart in gold is basically the market approaching the sell one level yesterday, or on the 8th at 12:45 p.m. made a high of 1563.80, right into that 1564 sell one level, activated. It was close enough to activate the signal. It did at the time. The data pointed to 1463, and it went short. By not going through and penetrating above it and closing below after the test of the price going through the pivot, it activated a bearish trend signal, and automatically the first target in this case was pretty much the extreme level below the mean, because we go back here to the signal that was produced at pretty much 1583. You can see here 1583.40 on the 8th at 2:15 a.m. And this was after the market made the high of 1613.30 as we came into this week of January the 7th at 4:15 p.m. Now, one thing I want to point out to you, that the artificial intelligence gives you a multi-dimensional way of looking at the market in a very simplistic way. For example, what you're looking at here is a perfect Fibonacci sequence of 5 pivot levels. But they're not just pivot levels. The artificial intelligence converts those pivot levels into the highest, in identifying where the highest probability of supply and demand are, or where the extremes are within this structure of 5 pivot levels. And it's not 10 above or 10 below, and most traders can use a different number of pivot points, different number of levels, support, resistance. Anyway, it is based on the individual ability to be able to use it in a way that it would be constructive. And bottom line in what we do is a zero-sum game. So as long as it works, that's what really matters, is that it gives you those probabilities that you're looking for, so that when you enter into a trade and you take the risk, you have at least the probabilities going for you. There's no guarantees. If I say that when the market goes to sell one level, it represents a 90% probability, sell two is 92% probability, unless the market confirms it, it's only a probability. The artificial intelligence confirming the market action and the price, validating it, is the confirmation of the algorithm. The artificial intelligence prepares you, and it tells you, listen, the market is overdone at 1613. It's way above the sell 2 level, and don't chase it. But if it comes down and closes below 1583, okay, you go short. Automatically, when it activates your short signal, your target is the levels below. And so all the way down into the weekly mean, which was 1641 on the weekly. The weekly doesn't change. The data doesn't change. The daily data on the left of the chart changes. So what you see here is the market came down into the daily mean. It traded there for a little bit, and finally it came down on the 8th at 10:30 p.m. and completed the target of 1541. Now, I teach my subscribers a specific methodology based on the artificial intelligence behind the algorithm. And when the price reaches the objective, it goes neutral once again. So it takes the emotion out of the trade. And depending on the market price, which is always the one that dictates where we're going, the close on the next bar, and we use the 15-minute bars, activates the signal or what we call the trigger point. And in this case, we knew coming in that 1541 level was the target as we came into on Monday, and the market came right into that. And so we took our profits as I published them in YouTube and also in Seeking Alpha, the Associated Press, and all the places that we share this information with. And we went long, recommended our clients to go long for a couple of reasons. First of all, it completed the target of the mean, and the futures position completed this short trigger, but we are maintaining a portfolio of swing and position trades, and so therefore, even if we don't take a future signal, for example, we are still in the market benefiting by the stocks or ETFs that we carry. And so in here you can see pretty much the signal was activated. The market activated a buy signal at 1545.10. The stop was the pivot below, so 1541. You could use it as your stop. And automatically it activates the targets above, or the levels above as your targets. And as you can see here, it rallied right into that daily mean, completed the target, and it has pretty much continued to build what looks to be a bullish trend developing. So, in order to review this, and I wanted to focus just on the gold market right now because I wanted to just explain very, very thoroughly the logic behind the algorithm, and that can be applied in any instrument. The same logic can be applied in any instrument. And so, to recap, the gold market right now is in a bullish price momentum by trading above the daily average of 1583. It's activated a target. The first target of 1568. The second target of 1574. I'm sorry, 1564 is the first target. The second target is 1568. The third target is 1574. And the fourth target is 1583.40 once again. Your stop on the daily is the mean. You can, if you're trading the mean, whether you trade stocks or ETFs, it doesn't necessarily have to be the futures. You can use that to protect or partial or manage your risk accordingly. My opinion is that the market has completed the correction since the new highs were made of 1613.13. The confirmation of the reversion back up to the mean pretty much has confirmed the market has made a potential top, but the correction or the reversion back down to the mean has ignited a swing signal which indicates the possibility that the market may run up to test those highs and possibly make new highs. And so this is the magic of the variable changing price momentum indicator that produces for us some accurate, extremely accurate probability factors that we incorporate into executing for our own self-directed accounts, and it's verified here in Ticket Talker. This is Patrick MontesDeOca. We're going to continue to update you throughout the day, and in the meantime, have a great trading day. Talk to you soon.
Are you looking for an automated artificial intelligence trading system? Do you want to analyze commodities and financial markets to determine when to buy and sell? Looking for an indicator to predict future trends in the commodities and financial markets? Welcome to EMA2 Trade Live Signals. Our variable changing price momentum indicator, VC PMI, is an automated AI trading system developed and tested over a decade. The VC PMI algorithm is based on age-old vortex mathematics combined with Fibonacci wave theory, trend analysis, pivot points, and several other widely accepted financial analytical methods. The VC PMI can help you take emotions out of your trading and rely on simple mathematics to predict future trends in financial markets. This approach will make your trading more effective, consistent, and profitable. VC PMI algorithm. The VC PMI code points and levels are support and resistance levels and behave exactly like any historical supply and demand level. Therefore, the VC PMI code levels are useful as an index tool for both day trading and for selecting and exercising entries and exits for longer-term traders. Why VC PMI? The VC PMI relies on artificial intelligence to analyze markets and predicts future movements, which seek to determine what a security or commodity is worth at a given point in time. The VC PMI uses technical analysis in the form of mean reversion trading, which seeks to capitalize on extreme changes in the pricing of a particular market based on the assumption that it will revert to its previous state. The VC PMI can be applied to both buying and selling, as it allows a trader to profit on unexpected upswings and save when security or commodity is trading at an abnormal level. Visit EMA2trade.com for more details.